The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to uclabruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.
Good afternoon. Getting right down to business here. We are doing it live, doing more at 4 weekday afternoons, right after the Guy Benson Show at 3, and just before the 790 KBC News Blitz with my buddy Randy Wang. Motec on Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yep, the on-demand Motec on Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. The Dow closing at a record high for the third trading session in a row. It's been up and away since the Dow closed above 50K on Friday, and has edged higher to new higher highs since then. The Dow closed up another 52 points today to 50,188, but the other major averages pulled back. The NASDAQ actually slipped, and financial stocks also came under pressure today. The NASDAQ down to 136, back to 23,102. The S&P 500 also closing lower today by 23 points at 6,942. Looks like some of the big banking names, including Wells Fargo, B of A, and Morgan Stanley, end the day lower. Growing AI threats to financial firms' wealth management businesses appears to prompt the sell-off, which also sends shares of Schwab, Raymond James, and others down. Gold holding above $5,000 an ounce. Silver's above $81 an ounce. Bitcoin under pressure again today, dipping back below $69,000. We'll have extended market coverage this hour with Daniel Ives, Managing Director and Senior Equity Research Analyst, Global Head of Technology Research at Wedbush Securities, based here in Southern California. He's also chairman, by the way, of 8Co Holdings, focused on building a treasury of WorldCoin tokens, among other things. And on Bitcoin today, I'll discuss the latest moves with Natalie Brunell, broadcast journalist and host of the Coin Stories podcast, focused on Bitcoin. We're watching the price of oil. We've seen upward pressure in the oil markets lately, with President Trump saying today that he's considering sending a second aircraft carrier strike group to the Middle East to prepare for possible military action if negotiations with Iran break down. The U.S. and Iran resumed talks last week in Oman for the first time since the 12-day war last June. The president has simultaneously launched a massive military buildup in the Gulf while those talks got underway. Treasury yields inching lower. The U.S. dollar weakening after the latest report showed unexpected consumer weakness late last year. Looks like the Grinch suddenly showed up on Wall Street today on news that retail sales were flat in December from a month earlier, stalling after robust growth in November and defying forecasts for about a 0.5% increase. The data will be followed later this week by the delayed January jobs report and consumer price index. Shares of toy maker Mattel, based here in Southern California, down about 25% in after-hours trading today after Mattel reported a lackluster holiday quarter. Looks like Hasbro unveiled much better results, though, earlier in the day and saw its stock rise to the highest in about 6 years. Elsewhere, we're on the earnings front. We're watching what's happening with Coca-Cola. Shares of Coke down about 1.5% after it posted a disappointing net revenue. Coke shares basically going flat there. And Spotify's quarterly results coming in better than most analysts expected, fueling a 15% rally in that stock. Shares of Robinhood we're watching as well, down in after-hours trading after a caution on crypto trading weighed on that trading app's fourth quarter sales. Robinhood shares down about 7.5% in after-hours trading. Overseas, Japan's Nikkei average closing at another record high today, taking its gain so far this year about 15%. This after the new prime minister's decisive victory in parliamentary elections held this past weekend. Joining us live now on Your Money, the markets, the economy, and the whole works now, top-ranked money manager Ken Winans, President and Chief Investment Officer at Winans Investments at winansinvestments.com. Ken Winans also a market historian, author of numerous books. His latest is Investment Atlas 3, Creating Wealth Using Historical Trends, also Forbes magazine contributor. He's got his crypto credentials, too, and he's the host of the Wealth Minute features here in 790 KBC, host of Winning with Winans, heard in the Las Vegas area on the air and on podcast, too. Ken Winans, thank you very much for taking the call here this afternoon.
Well, Frank, it's always a pleasure. And it's funny that here we are in the 10th day of February, and we're still talking about year-end earnings. That just goes to show how much things had shifted. I actually think since COVID, it used to be, pretty much by the time you got to the third week of January, you had the news you had to have. Not anymore, and there's a lot more to come. And it's not that companies are hiding anything or there's anything sinister. I just think that there's just been a lot of changes. But with that being said, I want to just a couple of things that you said earlier before having me on, and I think it's a couple of lessons that I think people need to start taking as far as 2026 goes, things you have to look at. First off, a little bit of a lesson here. A lot of us thought the Dow Industrial Average was obsolete, didn't mean anything anymore. The S&P 500 was the high and mighty index. Well, lo and behold, it's simply not holding the case this year. And just looking at the 30 Dow stocks, Frank, you're going to be shocked when I tell you that the number one Dow stock for the year is, believe it or not, Caterpillar. I mean, it's not tech, it's not retail, it's not financials, it's Caterpillar. And lo and behold, the negatives, the goose eggs that I see in the Dow 30 are all tech. You're looking at Salesforce, Microsoft. They're just not doing well. So the moral of the story is that people need to start thinking in terms of tech is probably not going to lead this year. It doesn't mean dump all your tech stocks, but it simply means if you're heavy-weighted in tech like the S&P 500 is, you're just going to find it's probably not going to be a real great year for you.
All right, I haven't quoted Caterpillar stock in quite some time. The ticker symbol of that one is CAT, C-A-T, up 26 cents. It is $742.37 a share. That's quite remarkable. It's got to be near its all-time high here, I think.
Oh, I believe so. Yeah, it's amazing how. And by the way, stock number 2, close behind it, Honeywell. When was the last time anybody mentioned Honeywell on a financial show? But Frank, lesson number 2, and I know that I'm actually hearing a lot of it from the audience. That the folks that had just grown to believe you didn't have to do anything past exchange traded funds in order to make money, that the stocks are all the same, they trade as a herd and all that. Well, let me just give you something else that I think everybody needs to think about. I'm just going to, just for case in point, the SPDR retail sector ETFs, better known as XRT, and I'm not picking on this ETF itself. It's more to make a point. It's up a whopping 3% on the year. Big deal. Okay, and you just rattled off that financial, the basically retail sales during December were not good. Well, you know what? I beg to differ. If you're willing to dig in and look at the individual companies, lo and behold, Walmart is up 14% year to date. Casey's General Stores, another one of my favorite retailers, is up 18% year to date. I think, again, people who have gotten so used to the ETF world, you might find that stock picking is going to go a lot further for you this year. And you've got to look at the individual companies. I mean, a lot of people had written off Walmart, not that long ago, saying that Amazon was just going to crush it and Walmart is gone. Well, Amazon's having a lousy year and Walmart's reigning supreme.
On there live with top-ranked money manager Ken Winans at winansinvestments.com. And turning now to the cryptos here, Bitcoin taking about a 50% haircut recently. It was the high was 126 or so K, and got down to around 60K, and right now is at around 68,000 here. Give us your reaction to these wide moves, mostly on the downside for Bitcoin and the other cryptos.
Well, it is a full-blown bear market, and the old adage, try not to catch a falling knife. I know for me personally, I unloaded a lot of my crypto ETFs that I traded just because I didn't like what was going on. Here's the thing. There's actually some good news out there. I do think that especially Ether, but I'm going to throw Bitcoin into the mix too. I actually think they're beginning to get oversold. If anybody wants to pull out a chart, go look at Ether or Ethereum, whatever you want to call it. Whenever it gets down in this range, it's typically where it attracts buyers, and it shoots back up, and it's been trading this way for several years now. Again, I think there's a couple of things going on here. for me personally, I think everybody had assumed that the fast track on government regulation with crypto, especially with stable coins, was just going to fly this year. It was going to go very quickly. And then, basically late last year, I think there was just some cold water thrown in the process during that Senate meeting. And some senators finally came out and said, I'm never going to go for this. And I know it demoralized a lot of people there. But also, too, and I hate to say it, it goes back to some of the, and it goes back actually, Tether is one in particular. Tether will not comply with GAAP accounting standards, which means that money managers like me have to disclose that if I'm going to have that in a portfolio. That scares a lot of people like me who need to be GIPT certified track records. It makes things more difficult. So we're in the wild west of crypto. I think then you also throw in there very quickly, Frank, that the fact that gold and silver and platinum, many people can wrap their head around it. Even and silver's had a heck of a bounce here recently. I just see that that's stealing some wind out of the crypto sales.
All right, Ethereum, Ether, also known as ETH. We're looking at that price just above 2,000 here at the moment. Bitcoin at about 68.5 and Doge at 9 cents. What about the equities connected to the crypto strategy, for example? Looks like Michael Saylor buying the dip, not just the guacamole dip over the Super Bowl weekend, but the dip in Bitcoin. And we see a strategy stock down more than $5 at 133. And Bitmine Immersion, the one that's connected to Ethereum, is about at just below $20 now at $19.95. Would you be doing any bottom fishing in those names here after that tremendous haircut we've seen recently?
It's funny, Frank. I mean, the one that I watch very closely is Coinbase because it's the exchange for everything. Everybody knows who they are. I actually think it eventually, at some point in time, if and when the regulation ever does go through the way we hope it does, that the bigger investment firms would work with Coin on being able to interject that into their platforms. And, Coin is down 28% on the year. It's tempting to want to buy it. But what I would just suggest to everybody, just like I mentioned earlier about trying to catch a falling knife, be very careful in trying to call the bottom on any of these things. Wait for the froth and the fear to clear out of these things. Let these things get downright boring. Then I would step in and buy them. Trying to buy them right now when there's just crosswinds of news, and I certainly wouldn't buy them until they've done their year-end reporting for 2025. I wouldn't touch any of these things because I think there can be some bad news. You mentioned today, well, I mean, I'll just give you one that, here's just a very good example of it. The S&P 500's parent company, S&P Global, symbol SPGI, ended up getting a tremendous haircut today. It was down 10% on questionable earnings or earnings not meeting expectations. Again, I mean, you want to be careful in this environment. You really do.
On the live with top-ranked money manager Ken Winans, and of course, we're all watching what's happening in the Middle East with U.S. forces massing at the largest scale since the Persian Gulf War days. Price of oil has come under upward pressure lately. Right now, let me bring it up here at 64 and change. What about oil in all this and what's brewing in the Middle East?
Frank, I'm actually buying oil, and I have been buying it for a while, and also that would include oil stocks. Oil, I mean, it has what we would call resistance at 70. But right now, the trend, it had been going down for a long time. As everybody knows, it's been in a long time downtrend, but it's beginning to go up. I think that plus we all know that back east, it's awfully cold. So anything in the energy complex, which would include natural gas, heating oil, gasoline, and light crude, as we call it, there certainly it makes sense to buy them. There are some dividend plays you can also look at there. But frankly, it's a very interesting dichotomy to look at what moved last year and what's moving this year, and to see that things have changed and shifted. People typically believe that things don't shift that fast, but we're finding that they do. And again, I think anything in the commodity space will probably end up having a pretty good year.
All right. Well, so much to talk about. We have that so-called washout when Kevin Warsh was named by President Trump as the next Fed chair. There was one report that was having second thoughts about it, or I don't know if he was kidding or not, but that would be interesting. And we're still waiting for the Supreme Court to rule on the tariffs, so there are definitely some wild cards out here. Another bullish sign historically, and I love that you're a market historian, the Seahawks won the Super Bowl, so their conference, if they win, that's normally a bullish sign, right, over the Patriots. So taking all that into account, what do you see ahead for this market and the economy? We're going to be getting the jobs report tomorrow, delayed because of the recent government shutdown and a new reading on inflation. What do you see ahead on all those fronts?
Well, I'm glad you brought up that we're still having the delays from the government shutdown, the last two government shutdown, the one in the fall and then certainly this partial shutdown we just had. I know that the government databases that I'm dependent on for a lot of my research, I'm told that I'm not going to get 2 months worth of numbers until later this month. I think, again, it's a bit like flying an aircraft and not sure if your instrumentation's flying well. So you have to look at what's going on with the stock market itself. It's one of ask Warren Buffett. You look at market movement. Mr. Market has a wisdom unto itself. But Frank, it's so funny because it depending on where you are in the country, real estate is either a positive or it's a negative. And one thing that is just, absolutely shocking me, I just did not think it was going to happen this year. The real estate stocks that I track in my stock index, there's 37 companies, they're up 13% on the year. And I think that I want people to wrap their head around it because I know that there's been some real strong headwinds, certainly with what's happening in the fire-ravaged areas of California on trying to get home building going here. But I'm looking at, I'm just absolutely in shock to look at some of the nation's biggest home builders, which include Lennar, Pulte, KB Homes. These stocks are all up 14 and 16% on the year. And I'm talking about 5 weeks? There is just there's money moving into real estate. And if we can get the real estate sector really humming going into the spring, I think we could find the economy doing quite well. Again, I know that's different than the news they're hearing from deciding on what side of the political aisle you want to listen to, or even a lot of the government data coming out about real estate. But the real estate stocks that are involved in especially new construction, new homes, they are on a tear. And I think you got to take that as a cue that maybe there can be some real bright, spots showing up later this year in housing.
It looks like the politicians here in California doing wonders for real estate and for realtors, not here, but in Las Vegas, where you are, Ken, and also in Florida, as this talk about a wealth tax, a so-called billionaires tax, looms here. Looks like Mark Zuckerberg has become the latest California billionaire to relocate to Florida, and looks like Las Vegas also now humming with affluent California home buyers. Since you're right there on the front line in Vegas, what are they saying about this?
Frank, all I can tell you is that when you come to Vegas, now it's funny, when I talk to Californians about Vegas, they claim that the Strip is empty, nobody's here, and it's a ghost town. It cannot be further from the truth. This place is humming, and housing prices, especially on I would say that, obviously the extreme high end, but also on the intermediate end, it's moving here right now. And that change in mortgage rates made a big difference certainly in September, October. It is, state lines do matter. And I think it's not just Las Vegas, but it's pretty much all the basin states are directly benefiting from this continued migration. Frank, real quick, and many of the audience might not know this. I went back to Dallas, about 3 weeks ago, and I will tell you that all these big financial firms are building massive new complexes. That is the new Wall Street, is Texas. And a lot of the regional firms are coming to Vegas as well. This migration is true, and it's so sad to see some of these policies coming out of Sacramento. It's beyond crazy to think that you're going to drive your most successful citizens out of the state, but that's exactly what they're doing.
Top-ranked money manager Ken Winans, President, Chief Investment Officer, Winans Investments at winansinvestments.com. Wish we had more time here, Ken. We'll have to stop there. Thank you very much for taking the call live with us here this afternoon.
My pleasure, Frank. Take care.
Thanks very much. 790 KABC.
You didn't start a business just to keep the lights on. You're here to sell more today than yesterday. You're here to win. Lucky for you, Shopify built the best converting checkout on the planet. Like the just one tapping, ridiculously fast acting, sky-high sales stacking, champion of checkouts. That's the good stuff right there. So if your business is in it to win it, win with Shopify. Start your free trial today at shopify.com/win.
The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.
Every week on the Stacking Benjamins podcast, we talk personal finance trends.
Not paying attention to the headlines is the strategy proven to work.
One headline, economists fear global recession. Literally the next headline, stocks hit all-time highs, investors optimistic on the future.
They're even doing it to the weather now. 28 million people in the path of this snowstorm. That means 340 million people have got good weather. It's just weather.
Layers, people, layers.
Stacking Benjamins. Follow and listen on your favorite platform.
Moteca Money continues, 790 KABC. The Dow continues to wow, another record high for the Dow Jones Industrial Average. Third trading session in a row in which the Dow has achieved a record high above 50,000, closing up another 52 points today at 50,188. The S&P 500 slipping 23 at 6942. The NASDAQ down 136 at 23,102. The yield in the 10-year note is back down to 4.15%. The volatility index, the VIX index, the Wall Street so-called fear index of 2.5%. The price of gold up about $40 now, $5,070.10 an ounce. We see silver at the moment up 74 cents at 81.12. Checking the price of oil, it's higher by 32 cents at the moment at 64.28 in after-hours trading. Taking a look at the cryptos now, Bitcoin hovering at around 68.5, down about $130. Ethereum at 2014. Doge at the moment at 9 cents. We'll have extended market coverage coming up for you in the next half hour. Daniel Ives, Managing Director and Senior Equity Research Analyst, Global Head of Tech Research at Wedbush Securities, will be joining us. And Natalie Brunell, broadcast journalist and host of the Coin Stories podcast, focused on Bitcoin, also coming up in the next half hour. Stay tuned to Moteca on Money here on 790 KABC. Moteca on Money continues, 790 KABC. Extended market coverage for you this afternoon with the Dow at a record high for the third trading session in a row, closing above 50,000 for the first time on Friday and extending gains since then. The Dow up another 52 points, selling at 50,188 today. But tech names have come under pressure with the NASDAQ down 136, the S&P 500 slipping 23. Looks like an AI threat has wrecked software stocks recently, and financial stocks also taking a hit, with financial services companies moving lower after the launch of a new AI-powered tax planning tool that promises to do the work within minutes. Following all this very, very closely, I'm delighted to say we have with us Daniel Ives, Managing Director and Senior Equity Research Analyst, Global Head of Tech Research at Wedbush Securities, which happens to be headquartered right here in Southern California. Daniel Ives, thank you very much for taking the call here this afternoon.
Great to be with you, Frank.
Wonderful to have you with us. Give us your reaction to this latest price action here with the tech names coming under pressure while the Dow is hitting record highs.
Look, a lot of it really has been software driven. I mean, the software sell-off is really unlike anything I've seen in 25 years, because it's the view that AI is going to essentially be a secular decliner for the software space. You see Salesforce, Microsoft, ServiceNow, and others. Frank, I think it's the wrong call. I ultimately believe software is going to play a huge role. This sell-off, I think, is a huge buying opportunity. And I think you're seeing these knee-jerk reactions, just like you talk about financials today, with some of the AI tools that were released. These are kind of like these mini DeepSeek moments that we're going through. But I think ultimately they're going to be short-lived.
All right, tell us more about what got this ball rolling here, this tech platform, Altruist, announcing something within its AI platform, something called Hazel. We keep expanding our vocabulary and our names here. What do we need to know? What do we need to know about that?
I mean, look, you're going to have disruptive tools that come through. Just whether it's Claude, Anthropic, this is one, obviously, what we're seeing in financials. But you look at the sell-offs in Schwab and others, I mean, I think that's unwarranted. I think investors are kind of shooting first and asking questions later. And
Right.
that's why in this market, that's going to be the theme that plays out throughout the year.
Yeah, Anthropic's AI model hit the software stocks earlier this year, right? What about Anthropic here?
Look, it's a phenomenal model, phenomenal company, but it is not going to unseat Salesforce.com, ServiceNow. In the enterprise, hundreds of thousands of enterprise that use these software. Now, on the edges, it will be a headwind for software, and we've talked about it. But I think you have to separate between a headwind. These stocks are structurally selling off like they're basically declining businesses. And I think that's the wrong move. And me and you have talked obviously for years, and like these are more the opportunities in terms of some of these knee-jerk reactions. It's our view. Like we talk about, like it's second, third inning in this AI revolution.
It's been a while since we chatted behind live microphones. So, any updates to your list? Yeah, I know you're very closely followed on all the financial networks, and of course, do a fantastic job with all of your research notes there at Wedbush. Have you made any adjustments on your recent lists?
Yeah, I mean, look, on the sell-off, we added ServiceNow and Salesforce to it because, to me, in terms of the Ives AI 30, who are the 30 names that are going to be the huge beneficiaries of the AI revolution? And I think the software sell-off is way unwarranted. And that's why we added those names. We took Roblox and Baidu off, but it speaks to my view. Like I think a lot of these stocks will hit their lows in January, February for the year.
On there live with Daniel Ives at Wedbush. Give us your reaction to the sell-off in cryptos recently, with the Bitcoin going from its high of 126 down to 60 recently, and it's around 68 here as we speak. And of course, strategy, Michael Saylor's Bitcoin-focused equity has taken a big hit. BitMine, Thomas Lee's Ethereum-focused stock has also taken a big hit. Give us your reaction to the latest action in crypto land.
Look, it's been jaw-dropping, right, in terms of the crypto sell-off. I mean, is it a crypto winner in terms of like what's happened? Is it deleveraging? I mean, look, I'll be at a crypto conference this week. I think that's everyone's trying to figure out where the bottom is and what's really the root of the sell-off. Now, I do think, like we saw over the last few years, you're going to go through some of these periods. I think it just comes down to like, it's our view, you're still going to see a major upward trend in crypto. But we're going through, it's somewhere between a deleveraging and a risk off. And that it's kind of combined to what you're seeing play out. I think investors, everyone's trying to figure out where the bottom is in crypto here.
Have you had a chance to interact with Michael Saylor recently? He seems to be buying the dip and is committed to Bitcoin, and reportedly bought some additional Bitcoin recently.
Yeah, look, I mean, obviously Saylor I've known many, many years, and he's someone that he's not going to let things like this kind of get in his way. It's his view in terms of the long term. He doesn't view things like in a matter of weeks or months. He views things in a matter of years and decades. And he continues to buy. And I think that's, look, like anything, especially what we're seeing in crypto, it's going to separate out. You're going to have obviously a lot of nervousness, but then it comes down to like, that's where the opportunities ultimately are born, right? I mean, if we think about what's happened in tech last few years, it's the same concept.
I believe there were some postings yesterday. Was the anniversary of when Bitcoin hit $1 for the first time, right? Was that, about 12 years ago? February 9th, 2011. Yeah. About 15 years ago, Bitcoin hit $1 for the first time.
Yeah, I mean, look, it just shows how far it's come. I mean, you've talked about, a long time. It's like, it's something where, look, obviously there's questions about, does it eventually partially become a reserve currency in the U.S.? Like, how do governments ultimately interact? it's going to be an asset class. But it's no different than, like, look at some of the moves that we've seen, not to the dramatic extent of crypto, in gold and silver. I mean, we're seeing some very violent moves in this market on a daily basis.
There's talk about Bitcoin reserve at the U.S. Treasury, right? Sort of like the Strategic Petroleum Reserve. Yeah. This would be the time to start loading up, you would think, right, with this dip?
Well, also, it comes down to, like, if U.S. doesn't do it, Russia and China will, right? I mean, I think that's the whole issue, like when you have a limited supply. So obviously there's a big focus on if they'll ultimately head down that path. There's obviously a lot of legislation involved, but it's something where, I think this is going to become, and I've been in D.C. a bunch of times, like, this is going to become more front and center as we go throughout the year.
All right, certainly a lot more fun when it goes up. I take it you don't think it's going to go to zero then, right?
Look, Frank, it's our view. Like, you're still going to see, like, whether it's 100,000, 150,000. You're going to see crypto in an upward move. But I just think right now it's kind of like it's almost a buyer strike in terms of what's happening. It's a deleveraging. But I think it's going to create the opportunities for those that are able to kind of see through forest or trees.
Any other specific places where you are putting money now and or taking it off the table?
Tech. Frank, it just comes down to, like, for the first time in 30 years, U.S. is ahead of China when it comes to tech. AI revolution led by, there's one chip in the world fueling it, led by Godfather of AI. It's not Motec. It's Jensen. But the point is, like, that's where everything's heading. And it just comes down to, like, you look at earnings season, you have 650 to 700 billion in CapEx. That is massive, and the ripple effect's just starting to come through.
Fantastic. Daniel Ives, Managing Director and Senior Equity Research Analyst, Global Head of Technology Research at Wedbush Securities. Daniel Ives, thank you very much for taking the call. Look forward to talking to you again very soon. Thank you very much.
The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.
Mic Drop, hosted by former Navy SEAL Mike Ridland.
What does it mean to be an American?
Be American is you love your country above all else.
I love this country. I was born here, raised here. I offered my life to serve this country.
And if you don't do your part to preserve what we have here and our culture, it's going to be gone. And we can't let that happen.
Yeah, that's Mic Drop.
Mic Drop. Follow and listen on your favorite platform.
Motec on Money continues here, 790 KBC. Is Bitcoin going to the moon or is it going to zero? A lot of people talking about the possibilities as Bitcoin's been bouncing around big time lately, hitting a high of above 126,000 last year and down to around 60,000 recently. Right now it's at around 69,000. Ethereum, by the way, just above 2,000, and Doge at the moment at 9 cents. Michael Saylor, of course, has Strategy, formerly known as MicroStrategy. CEO Michael Saylor now brushing off concerns about the company's credit risk if Bitcoin continues to tumble. He spoke to CNBC. Saylor is saying he plans to keep accumulating Bitcoin for the company every quarter. He told CNBC's Squawk Box if Bitcoin falls 90% for the next 4 years, we'll refinance the debt. That's what he told CNBC this week. We'll just roll it forward. He was asked whether he believed banks would continue to lend to the digital asset treasury firm if Bitcoin collapses. And Saylor said, in his words, yeah, because the volatility of Bitcoin is such that it's always going to be of value, unquote. Bitcoin was last trading at around 69,000, down about, 9% over the past week or so. It has retreated as investors broadly reassess its utility, according to CNBC, with the token tumbling 15% to $60,062 last Thursday, its lowest level in about 16 months. The Crypto was down more than 50% from its recent record over the past week. Strategy, formerly MicroStrategy, has more than $8 billion in total debt on its balance sheet now, in part due to its issuance of convertible notes used to buy Bitcoin. Looks like they bought some more today based on some social media postings. Saylor also dismissing suggestions that Strategy would sell any of its digital asset holdings. He said, "I expect we'll be buying Bitcoin every quarter forever," in his words. Looks like a Strategy stock today pulled back $1.32 at, let's see, bring up the Strategy quote here. Strategy shares actually down $5.44 to $1.33. Looks like it's up slightly here in after-hours trading, up 27 cents at $133.27. At last check, Strategy holds 714,644 Bitcoins, worth about $49 billion. According to its website, that makes it the largest corporate owner of Bitcoin. Saylor notes his firm has 2.5 years' worth of cash on its balance sheet to cover dividends. Strategy moved lower this week as Bitcoin broke below 70,000. Once again, the Strategy stock's down about 40% over the past 3 months. We continue to follow what's happening with the Strategy. And also, according to CoinDesk, it looks like concerns over Strategy selling Bitcoin are unfounded. That's the latest from Strategy's executive chairman, Michael Saylor, affirming the firm's commitment to a long-term Bitcoin strategy following major fourth-quarter losses and a continued plunge in prices early this year, according to CoinDesk. Saylor framing Bitcoin's sharp price swings as both a risk and a feature of digital capital, arguing it'll outperform traditional assets over the next 4 to 8 years and stressing that the firm's balance sheet carries no credit risk in his view. Saylor saying concerns that Strategy will force to sell Bitcoin amid price declines are unfounded, and he repeated the company has no plans to stop further acquisition of Bitcoin, according to CoinDesk. Concerns that Strategy will be forced to sell Bitcoin amid falling prices are an unfounded concern. That's how he put it. Chairman Michael Saylor said that during a CNBC interview, affirming the company's commitment to ongoing purchases. Last week, the company added about 1,100 Bitcoin to its holdings for roughly $90 million at an average price of $78,815 per coin. The company's total stack now stands at 714,644 coins purchased for about $54.35 billion, bringing the average cost for Bitcoin to $76,056, well above the current price of around $69,000. Saylor's comments coming as Bitcoin has seen significant volatility, pretty much downward over the past month or so, though he emphasized that swings are part of the asset's design. He said, once again, the key to keep in mind is that Bitcoin is digital capital, and went on to say it's going to be 2 to 4 times as volatile as traditional capital like gold or equity or real estate. It's got 2 to 4 times the performance this decade of traditional capital. As was noted in my last conversation with Daniel Ives just a few moments ago, was 15 years ago as of yesterday that Bitcoin reached $1 for the first time. And, of course, got as high as 126,000 or so last year, and right now hovering at around 69,000. The Saylor says you can trade it in more ways than any other kind of capital asset, so the volatility is the bug, but the volatility is the future. Strategy reported an operating loss of $17.4 billion and a net loss of $12.6 billion for the fourth quarter, according to CoinDesk, reflecting largely non-cash mark-to-market accounting tied to Bitcoin's price drop. The results highlight how swings in the cryptocurrency's value continue to influence the company's financial statements despite its long-term investment strategy. Saylor also addressing the notion that Bitcoin's current price levels could represent a new form of market maturity, which he characterized as a good thing. Strategy's balance sheet and its digital credit business, are central to its strategy. The firm's digital credit structure has emerged as one of the most actively traded credit instruments of the decade, generating substantially higher cash flow than traditional fixed income products and far exceeding the trading volume of preferred stocks. Saylor, by the way, declined to offer a short-term Bitcoin price prediction in his recent comments, but repeated confidence in long-term performance. He said, I don't really make predictions over 12 months. He said, I think that Bitcoin is going to double or triple performance of the S&P over the next 4 to 8 years. And I think that's the only thing we need to know, in his words. Once again, Strategy shares did pull back by more than $5 today at $133. Bitmine Immersion, that's another story. We're following that closely. That's the stock that's closely tracked to Ethereum. Thomas Lee's company is Bitmine Immersion Technology. Let's bring up the latest news on that one. Looks like Bitmine Immersion Technology announces ETH holdings reach 4.326 million tokens and total crypto and total cash holdings of $10 billion. That's the announcement that came directly from Bitmine Immersion Technology, the company. And looks like they're based in Las Vegas, by the way, where our Ken Winans talked to us from just a little while ago. Bitcoin and Ethereum network company with a focus on the accumulation of crypto for long-term investment, announcing Bitmine Crypto plus Total Cash plus Moonshots holding totaling $10 billion. As of February 8th, company's crypto holdings were disclosed in a statement. ETH prices declined 62% from 2025 highs, while Ethereum daily transactions hit an all-time high of 2.5 million, and active addresses soared this year to 1 million daily, according to the block. So according to Thomas Lee, the executive chairman of Bitmine, crypto prices are highly volatile, according to a statement from Bitmine Immersion. To overstate the obvious, and in fact, this is the 8th time since 2018 that ETH prices have fallen 50% or more from a recent high, meaning declines like this are seen annually in 2025 from January to March, according to Bitmine. ETH prices fell 64% and yet still surged from 1,600 to 5,000 later in the year. As of this week, Bitmine total stacked ETH stands at, 2,897,459. Bitmine has staked more ETH than other entities in the world, according to the company. Bitmine Immersion stock closed down today by $1.50 at $19.95 a share. Recapping the day on Wall Street, the Dow stands at a record high. And by the way, if you missed any of the program today, Ken Winans was on earlier, and Daniel Ives from Wedbush also talking tech. We did see the Dow closing at a record high for the third trading session in a row, closing up 52 points today, settling at 50,188. If you've just joined us in the recent days, the Dow closing above 50,000 for the first time on Friday and has extended its gains since then. The S&P 500 slipping 23 points today at 6,942, and the NASDAQ sliding 136 points at 23,102. The yield in the 10-year note is back down to 4.15%. Volatility index moving up today by 2.5%. Gold, good old analog gold, still above 5,000, up about $39 now at $5,070.10 an ounce. And silver at $81.12, up 74 cents at the moment. Crude oil moving higher, up 32 cents at the moment at $64.28 a barrel. Stay tuned now for the 790 KBC News Blitz with my pal Randy Wang, and I'll be back with more at 4 tomorrow afternoon, right here on 790 KBC.
The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.